President's key economic team goes to China.
After a whole night thinking, I say I still want to do it.
Hey there, this is Ray Ma, your China Tech Analyst. Welcome to TechBuzz China Livecasts by Pandaily. As the name suggests, these conversations are recorded live and then edited for your listening pleasure. Some of these chats are open to the public, and we welcome you to join us. So be sure to follow us on Twitter or sign up for our mailing list to get notified. Remember, members of TechBuzz China Insider get priority access. So if you're an investor or operator looking to join the smartest community online focused on China tech, go to techbuzzchina.com and see if you qualify. Extra thanks to our partner pandaily.com, where you can learn everything about China's innovation. Thanks for subscribing, guys, and do give us a review. Welcome to the Inside Asia Club. This is the first club on Clubhouse focused on Asia, and we invite speakers from all aspects of life in Asia to talk about what's happening on the continent. My name is Ray Ma. I am the co-host of TechBuzz China, which is a podcast as well as now a community for funds and operators interested in diving deep into China tech. And today I have the great pleasure of having Ron Tao here. Me and Ron met in Shanghai, where Ron has been investing in China for 20 years. So his background is that he started off at KLM Ventures, and then he was at Lightspeed China, and now he has his own fund called Sky9. So some of Ron's investments, some of you may have heard of, they include Fang Didi, ByteDance, Meituan, Pinduoduo, QingCloud, Chujia, etc., to name a few. Today's topic, as you can see, is called The Next China is China, right? I actually recently wrote a short column for The Wire China, which is a publication focused on China, called The Next China is China, and it came from Ron, actually. The basic idea is that there are about 400 million people, give or take, living in what I'm going to call developed China. They have lifestyles that are very similar to what we see here in the developed countries in the West. But there are something like 1 billion people in China who live in quite different conditions. And actually, last year, the government said that there are 600 million people who live on incomes of less than $150 a month. So that's quite different from the average citizen in a Beijing or a Shanghai, and they have very different needs. So when I asked Ron last year, right before the pandemic threw things out of whack, and we met up in San Francisco, I asked him if he was going to invest in Southeast Asia or India or all these growing places. And he looked at me and said, no, Ray, I'm going to stick with investing in China. The next China is in China. I interviewed Hu Boyu recently as well, and he also said that he was focused on rural or developing China because it's growing at 10% a year. So while the whole country might be growing at 6%, rural China is growing at 10%, which is still very high. So having given you all of that as background, I am just going to jump straight into questions because we do have a very limited amount of time with Ron today. So first question for you, Ron. Since we spoke last year, has the pandemic changed your opinion at all on the growth of what we're calling rural China? Did it make you more fearful or more bold about this particular thesis?
The short answer is no, there's no change in that. I assume most of you haven't been to China since the pandemic, but the country has recovered relatively well given the severity of the circumstances. People are flocking back to malls. The retail sales, I think, is at an all-time high in Q4. And I think also there's quite a bit of confidence, consumer confidence in terms of how the situation was handled, and it would be a speedy recovery back to full normal. So I think overall, certainly there's no change in the thesis in the macro environment. I would say perhaps that there's even more confidence on the ground that China will come out fairly strong overall, and not just domestically, international stage. You have Q4 numbers show that exports all-time high. It's being countries productive, people are confident spending. In terms of rural parts of China, most of China is rural. I think we tend to forget that, and we don't see any changes in that thesis. In addition to consumer, you see more adoption of technology. I would just add a few comments there. On the enterprise side, with Chinese companies looking for more efficient ways to communicate, to manage, and you're seeing opportunities perhaps even bigger today on the enterprise software side than ever. And I would say third thing, in terms of being a global factory, it's still very much intact. A lot of the production, I think we're going overseas, and a lot of that came back. I think China has proven to be very robust in terms of the supply chain, unique in that way. And certain things, even though might be cheaper in some other countries, but the overall efficiency, many of them don't rival China. So you see a lot of production still, capacity still increasing. And post-COVID, you're seeing, in China, they're calling it post-COVID because it feels that way, but you're seeing exports at an all-time high as well.
Would you be able to disclose a little bit more detail on, for example, how has that changed your portfolio construction? Are you spending more time on enterprise software? People are investing, for example, more in robotics. Is that something you're also pursuing?
Yeah, we are. Consumer is such a big market. On the enterprise side, you just have a sense from top all the way to your convenience store manager that everybody's on the same page in terms of technology is the future. We are funding enterprise software. We're funding cloud infrastructure related projects. They've been certainly bread and butter for some of the US VCs, and a lot of things have been played out in the US. They're still being played out today in database software, SaaS. So there's still a lot of it catching up to do, if you would, versus the US enterprise market. But at the same time, you're seeing a lot of very advanced work being done in newer fields, leveraging blockchain to do enterprise security software, leveraging AI to reduce the time for pharmaceutical company to discover new drugs, leveraging big data to produce the next generation business intelligence software. So you have this interesting market. We have things that you're trying to catch up, the basic stuff that you see in the US, and very advanced technology applications in new fields where there's talent and there's demand and there's sort of vision among some of the top entrepreneurs.
I want to just double click on some of the deep tech you're talking about, things like semiconductors, genomics, all these things that are deep tech, and that I felt that in the past 10 years, there were a ton of investors investing in. But now there's a big seismic shift where everyone's interested in all this stuff. That's where China isn't necessarily catching up because it's just new for the world all over. Is that your sense?
It is. And that wave, I would say, did take place 20 years ago. There are a lot of semi investments, component investments. Then the consumer wave took over because that was such a huge wave with mobile internet, e-commerce. I would say that wave is coming back with a sort of next generation infrastructure in advanced semi, in AI-driven various applications. Some of it, I think it happened in a normal cycle. You see that in the US as well. The funds that do well in consumer do well for maybe a decade, and the funds that do well in infrastructure do well for a decade, and there are funds that do well across all sectors. But you see that wave. It's no different in China. Perhaps this time it's even broader on the enterprise side because you have a new technology angle that's really new, not just in China, but across the world. Some of the things I mentioned, they're disruptive in a Kathy Wood way, if you would. Things are going in the next 10, 20 years.
Maybe you could explain, because when you first started 20 years ago in VC and you started in Silicon Valley, you were working on semiconductor investments, correct?
Yes.
And that's what brought you to China, actually.
Yeah, that's very good. Yeah, so I started in the Valley looking at telecom components, optical networking components, fabless semis, right around the dot-com bubble. Before I joined the industry in venture in 99, went through the collapse and had a portfolio to manage in those sectors. And things were picking up in those sectors in China as well, as part of the sort of internet 1.0 boom. But the consumer experience is much bigger soon after that infrastructure wave. So yeah, and I think that you see the same phenomenon there. A lot of the entrepreneurs are international background, mostly from the US, some Europe, and they're typically more experienced and see an opportunity in the market in China, building something that either fits the market or building something that is ahead of the market in terms of leveraging new technology. Even with our fund allocation, our first fund 2011, I would say 80% consumer. Our latest fund 2019, so far we're still looking 50-50 consumer versus internet versus enterprise.
Okay. And then you get to go back to your roots of investing in all that difficult semi stuff.
I mean, I did a semi deal, I would say, the first one in over, I can't remember how long, maybe 12, 13 years. So I refresh how everything works.
And when you were saying that the entrepreneurs who have overseas backgrounds, you're talking about right now, more entrepreneurs with the overseas backgrounds returning to China to make these businesses that have advanced technologies.
Yeah, I would say even across the board, people move around, not necessarily US, but there's quite a bit of folks who've gone to school in London and other parts of Europe. And we try to back people with experience and foresight, very much a people thesis type of investment theme. And some of the top people have done amazing things in their careers. And typically they have some international experience, whether living overseas or work for an international firm. That's almost not a focus point anymore. So where they're from, more what kind of experience they had.
Got it. The requirement for talent is just much higher.
Yeah.
Has it changed at all how you do business? You're in Singapore right now. So is it a lot of like here in the US doing deals over Zoom? Or is it because China got over COVID so fast that that's not as much of a thing? Are you guys more open to remote first or distributed companies?
I would say across the board, everybody's more efficient. I've taken Zoom calls with government folks. Usually government folks are folks that are notorious for very difficult to meeting. I still remember trying to organize a meeting and the response is, great, Ron, come visit us. Call me when you land. I said, well, can we set up a time? So now you can actually do a scheduled Zoom call. I think that's par for the course. And yeah, entrepreneurs meeting over Zoom or doing a bunch of funds or angel funds. A lot of them do demo days. You can go through 20 portfolios of theirs, raising money in 1 hour. And I think that's the issue. It's too efficient where you have to work all the time. That's the downside of it. There's so much to process. We looked at a deal Mondays where we have meetings that's making a suite of products that make women look more made up with different makeups and eyeliners and eyelashes. Then we go to a blockchain decentralized wallet company back to back. That's sort of Zoom calls we have lined up. So you got to be on your game. You got to be really studied up on the latest trends and understand different models and technology.
I know that you're like big into blockchain, actually. I referred you certain deals before. What are you thinking now when it comes to blockchain, especially in China? And then I know the 2 sessions also had some plans for blockchain in China.
I feel like I should be talking about blockchain. It's such an interesting topic as a professional investor. It's an area where there's no boundaries. And we manage money for our institution, and we have boundaries of what we can do and can do. Some of it is exploring what that boundary is. That's at a philosophical level. We're one of the early investors in the space in China. In fact, we invested in BTC China, which was the first crypto exchange out of China back in 2003. And CZ, our fearless leader in Binance, I think he even alluded to in the podcast. I was credited as the person who told him about Bitcoins in the first person.
What?
And,
wow.
And I remember that night I told him about it. And he was, certain people you tell him about it, they don't get an immediate reaction. They think about it. CZ, he quote unquote gets it right away. And he was very, I think you can tell it's his new passion. And he, of course, went to OKCoin and he started his own exchange. So we've been early in the space and seeing how it's evolved from the hackers to the first wave would be more exchanges and some wallets to sort of the ICO movement, which I think for the most part wasn't great, but it was part of the evolution of it. Now to DeFi and other 2.0 ideas. So I think the space is taking shape. I really believe so. And there's more talent there, more ideas, and there's so much development in there. Singapore, I spent a lot of time in that space in Singapore. It's not just a regional hub, it's a world hub of talent. NFT is very interesting. I think the question is, how do we invest as an equity shareholder? A lot of the stuff is decentralized by nature. No company, no ownership, just tokens and teams. So that's where we're trying to figure out certain new strategies. We do have a decent portfolio across the funds. I think we want to continue to explore there with some of the top ideas and top talent.
Would you say that your strategy when it comes to blockchain and DeFi, et cetera, is typical of other Chinese venture funds, or you guys are among the outliers in your exposure to the space?
I'm not sure, but I think we probably have more of a focus than most funds, I would say, because we were early. I think this is one of the spaces there has to be certain beliefs you have, and also a certain type of network, the deal flow and all that. I think the Coinbase IPO would get more funds behind it. It's one of those spaces. We had a portfolio, I won't mention it because they haven't made the announcement. We were in there early and they didn't raise any money for a while. Now they're closing around and it's a multi-billion-dollar valuation. So it's one of those things that I think investors are realizing that it's moving ahead in a different way versus the typical consumer internet deal where, every 6 months or a year, there's a markup, there's new investors coming. Something that works in blockchain has huge network scale effect. It just kind of lurks up on you. You do it and if it works, it's massive and it fits the venture model, but it takes a while. So I think once more funds have a little more exposure to it, they'll see the power of it. And I think the upcoming IPO, Coinbase and others perhaps will fuel the space even more, I would say.
Since we're talking about blockchain, why not talk about SPACs? I meant to ask Boyi this, but I forgot. Do you think investors in China are as crazy about SPACs as we are over here?
I think it's coming. This is the first SPAC wave ever, I would say, in the history of China, perhaps. We have so many portfolio CEOs asking me, what is a SPAC? Should I look into it? It's one-on-one time. There's a lot of SPACs being raised out of Hong Kong, perhaps in the US, looking at China. I don't think there's been a completed transaction for a Chinese property. We're not focused on it. It's a different investment vehicle, if you would, a little more later stage. But whoever came up with it originally, it's a clever thing, right? You can IPO and raise money at the same time and get more ownership. But I think over time, given there's so much money in the market in general, it's not clear to me SPAC, you have the top companies. ByteDance is not going to go out in a SPAC, I don't think. Others won't, probably. So I think it's fit for certain type of companies that might be perhaps in certain vertical markets that makes more sense. I haven't thought too deeply about it, but I think certainly it's that wave is in front of us. You see a lot of people knocking on doors of companies, SPAC, owners.
Yeah. Well, I think Ucommune is the only startup of stature I'm aware of from China that has gone public via SPAC. I've seen a couple other names, but I didn't even recognize the companies they were talking about. I myself just participated in a panel for Chinese businesses going chuhai, so going overseas. What do you think of that? Because I remember in 2015, 16, this was all the rage, especially going to India, Africa, and Middle East, right? Like crazy amounts of attention. I feel like now it seems to me that a lot of the entrepreneurs I meet wanting to start companies now are actually targeting developed markets. I wonder if that is because ByteDance has been so successful and now they have like this target. Oh yeah, I can do that too. What do you think of that?
Yeah, that's a great observation. It is, I would say, perhaps half our portfolio companies, the new ones, the newer investments have an overseas strategy. From a plant-based diet company to a semi company that's selling to Chinese box makers, looking at maybe other markets in Southeast Asia, Africa, etc. Of course, e-commerce with COVID, e-commerce has been big in terms of cross-border e-commerce. Shein is a mega company that should go out sometime this year or next year. And with that kind of trend, a lot more Chinese, both on consumer and enterprise side. On the consumer side, more confident we can actually go overseas and get market share. And the enterprise side, they have unique solutions that we talked about a little earlier, that's world-class in terms of how they think about delivering a new disruptive idea to the market. But just for example, the cross-border e-commerce, I would go back to that. We invested in a company called Dianjiang that's essentially a Shopify type of play, but they're targeting Chinese merchants. And a huge percentage of Shopify customers are Chinese. And Chinese merchants. So we're targeting that group and trying to service them better with additional customer support because we're in China. We can do Chinese language support, WeChat support. We have different payments that might be easier for merchants. On top of that, we have all these features that are just as good, perhaps even better than Shopify with mobile e-commerce features, with marketing tools that can maybe go to Southeast Asia, not just on Facebook and Instagram. That I think we benefit from the sort of recent cross-border movement. And we have a furniture company that's selling to China market. They're opening stores in Singapore and other parts of Asia. We have a beauty accessory company, a platform, offline platform. They're looking to open in the US. But they have really good products. They have really good supply chain. I think it's really building a consumer experience that's suitable for the Americans. And the CEO spent time in LA before. They understand how US youth spends money. So we'll give it a shot, see if we can be successful in the US market. So it's a theme that is actually very front and center in terms of how we look at a company, how big ultimately they can be.
Yeah, for e-commerce, it seems that there is a lot of ambition, not just towards developing markets, but developed markets as well. A lot of people ask me about the antitrust regulations. And I personally thought that they were actually pretty positive as a development for the industry. Would love to know your thoughts.
Yeah, that's a hot topic, certainly globally and definitely in China. Yeah, I agree with that. I think it's a net positive for sure. And certainly for us, we deal with startups all the time. We like to have a fair competition, fair place for everybody. So I think it's given some confidence to startups in terms of how they can have a fair playing field. And in a large company, China is no exception. All companies leverage their size to their advantage. And there's some really big Chinese companies out there. I think this sort of sets the tone and certain practices are pushed to the limit and the government step in and say, hey, you can't do that. And I think that's good in general for the startup community.
I'm honestly struggling to find people who work in the internet industry to think the antitrust regulations are bad. We have questions from the audience. David.
My question's related to the point you brought up earlier about some of these Shopify equivalents, if you will.
Yeah, that's a space we've been fairly active in recent years. There's more of a focus on B2B versus B2C. B2C is brutal, as you guys know. In the US and China, you got to fight against big companies and online traffic, user acquisition costs. These are all highly competitive things in China. It's very expensive. We've done a number of investments where we are essentially enabling e-commerce, providing tools and supply chain support for the individual brands or for lots of KOLs. There's 20 million plus KOLs in China doing various businesses online. They're essentially small business. They need tools, they need software, they need analytics, they need products, they need supply chain management. And we have a number of companies, they have different slices and cuts at that kind of a thesis. That's one. Another one is a lot of go offline, and that's a huge theme today in China as well, the offline-online model. Before we talked about online to offline, but now it's offline to online, where people are flocking back to malls. People are going to the local tutoring building to take, classes. And these companies need these stores or these educational shops. They need IT solution. They need online marketing. They need an online presence. And we have a company, actually a few, that enable that and build brands for them, get traffic, create curriculum for them. And we do revenue share with companies that, offline that have certain presence. So those are all themes that have been pursued, and we have portfolios in those areas. And also, I would say cross-border too, not just Shopify model. We have also other models to help these merchants to better deliver goods to other parts of the world. South America is a big market for us now, for Chinese merchants and makers. And we have a portfolio that help, in this B2B for that market. So I'll give you a taste, but that's a big focus for us right now.
Christopher.
Yeah. Very quick questions. First is, how do you advise your entrepreneurs if they have an opportunity to go deeper into China or say go to Indonesia? How do you guide them to navigate that kind of trade-off? And then the second one is, it's just, really awesome for Americans to really experience what Ali has done and what WeChat has done from a fintech perspective. Is there room for fintech startups in China right now?
Good questions. Hard to answer because they're big questions, but they're short answers too. It's just very difficult for a foreign company to come to China for obvious reasons. To be very honest, my first advice is don't come. And part of that answer is to test the will of the CEO, whether they want to come. If they say, okay, if I'm not coming, then they should definitely not come. Because it is brutal. It is absolutely brutal.
The Chinese company go to deeper into China, or should they look seriously at Indonesia or Brazil or some other large market that might have a similar need?
I think it depends on how they think. So much of success on, a company and a CEO is their mindset. It depends on the mindset. If their mindset is, hey, China is too brutal, let me go to Southeast Asia, I'm not sure that's the right way to think about it. If they say, hey, China is big, we're going to do well, and we can do well in Southeast Asia, in general, that mindset more. But for most things, China is big enough for these startups.
And is fintech, is fintech innovation now in the hands of the big guys, or does startups have any room?
That's a question we are debating internally. It is a good question to revisit. Certainly 6 months ago, a year ago, the answer is no. There's no more opportunity for startups. But I think the landscape has settled down, if you would, if that's the right word, where the government is clear on some of its policies. The P2P lending space has been cleaned up. And then the government, a lot of it is government-driven, is still very much open to new ideas. So is there peer-to-peer insurance opportunities out there? Is there some DeFi opportunities out there that can survivable in China? It's hard to say. We're kind of exploring that.
Justin.
I was curious, from your perspective, it's definitely a market shift over the last decade, both in terms of RMB deployment as well as the rise of the new Xingsanban, the SAR market, and new equity forces in China, as well as in the backdrop of the last several years of some of the Chinese internet companies either delisting from the U.S. exchanges and or launching secondary listings in Hong Kong. Do you think that this is a shift that's more or less just going to continue to accelerate?
There's a lot of moving pieces there. One, you have domestic market, the STAR market and Asia market being more open, more robust. Open meaning you can be an offshore company and list onshore. That didn't happen until recently. And of course, JVs, you can go public in China, local domestic structured companies. So this is essentially opened up US dollar investors into the Chinese IPO market, taking companies public, which is a very huge kind of movement. And then more robust, you have different rules that allow the exchanges to have more volume and better regulation. So we're more confident than ever that we can take some of our companies public in China as an exit mechanism. So you got that. And you have also foreign capital flow into China. China's more open to that. In fact, we have set up vehicles to convert our US dollar funds into RMB, invest onshore, as if we have RMB. That didn't happen a few years ago. So China is open for business, that's for sure. And they're agnostic where the money's coming from. They enjoy foreign investments. And then you have Hong Kong making a run to become a technology hub for Asia, for sure, then maybe perhaps for the world, and attracting a lot of Chinese listed companies, US, back home, quote unquote. So these are all trends that are very visible, and there's no reason those are stopping. At the same time, US market, what can you say about the US market? It's a roller coaster. You try not to look at it every day, but it's robust as ever. And a lot of companies that done really well there from China. In fact, we have, knock on wood, we should have 3 IPOs this quarter in the US from our funds, various funds. And some of the top tech companies, internet companies, fast-growing consumer companies are still looking at US as a primary option because it's still way ahead in terms of all the regulation and the focus from the investors and then the float coverage. The infrastructure is still the most advanced. Can all 3 things coexist? I think so. I think they can. Anytime, any moment in time, I think there might be a movement from one era going from one to another. But I think because of the China's more and more high quality companies coming out of China, I think everybody, US, Hong Kong, China itself will benefit from the exit in the capital market.
Bankers are going to be busy. Jen.
Yeah. You mentioned high-speed railway. I actually just read this very interesting figure that from Beijing to Shanghai is the same distance as Boston to Chicago. And the high-speed railway from Beijing to Shanghai costs half compared to Amtrak. And it takes about 4 hours. Whereas with Amtrak, Chicago to Boston is 22 hours. Yeah, that's the kind of difference. My question is related to semiconductor. What is the view in terms of this kind of investment going to semiconductor in China, be able to truly build a self-reliant supply chain in China? And what do you base your analysis? Thank you.
Yes, I used to work for Intel. I started my career at Intel, and I worked in the fab. I wasn't working at Intel Capital. I had a real job, as they say, and focused on processes and started my venture career in semis. There's certain laws in semis that I don't think can ever be broken. And I'm not talking about Moore's law. I'm talking about all kinds of laws. These things cost a lot of money. The cycle time for consumer can be too short. For the some of the larger chips, sell-in cycles really long. Competition. But there's all these, sort of things you learn from investing. It seems like those things don't matter today. In China, a lot of companies can go public with very small revenue. There's a certain amount of bubble going on there for sure. And like any sector, when there's a bubble, then most companies don't make it. I don't think there's going to be an exception here. So we're looking carefully in the space and trying to pick our battles. We like high-end products where there's a higher barrier. And those efforts can be perhaps having a lot more capital can help them to erect barrier. And then those high-end products usually have very sophisticated teams. And hopefully we can create a sort of a positive loop around more capital, more barrier, high-quality teams, and go after big markets. That's been our thesis. And part of it is the Chinese IPO market has been very open to small, early-stage companies going public. And that's euphoria among the investors. But these things have cycles, and I think we're hitting a peak right now. Always looking for partners and ideas and projects to work with. And I would call the golden triangle of unicorns, right? The Beijing, Shanghai, Silicon Valley triangle. Maybe you have to add New York at some point if sort of fintech takes off there. There's so much more collaboration. I think there's a lot of, sort of headline news of tension among the countries. But what I see on the ground is a lot of collaboration. And I think that's what everybody's really focused on across the borders. I hope not just our investments do well, but there's people working together on interesting ideas that makes the world better.
Thank you again for joining us in your early morning from Singapore,
Okay.
Ron. Thank you.
Thank you.
That's it, everyone. Thanks for listening. Remember to check us out at techbuzzchina.com. And if you're really serious about China tech, join our insider community. You do have to take a quiz, so make sure you listen to all of our past episodes on China tech on our main Tech Buzz China podcast. Also, a huge thank you to our editor Bryce Ye and the entire Pandaily team for all your help. Remember to go to pandaily.com to learn all about China's innovation. See you soon!